Well, the Fed's preferred inflation gauge came in lower than expected in September. That was good for the markets, but is it really indicative of a gradual slowdown in inflation? Joining us now is John Carney, financial journalist. John, great to see you. So is inflation moderating?
It is. Inflation has come down a lot from the Biden inflation highs that we saw, but it's not coming down fast enough. I mean, it seems to have gotten sort of stalled out, stuck at somewhere between 2.5 and 3%. It's good that it's not climbing further, but it's not coming down very fast.
Now, has that stuck period that we're in right now make you wonder whether we should have a rate cut next week?
No, because when you look at what's happening in the labor market, there really does seem to be signs that we could pivot either way. Look, we haven't had a lot of layoffs. When you look at jobless claims, they're not very high. They're totally reasonable, but we're not seeing a lot of hiring. So that could go either way. Either hiring picks up because the economy is growing, or hiring tips over and then GDP slows down because people aren't getting jobs.
But as you know, the biggest hirers in our economy are not the big corporations, but small businesses.
That's right.
And they are particularly sensitive to high interest rates. Very often, it's a mom and pop shop that has to borrow on their credit card, or, I mean, things that really affect. Interest rates are of critical importance to them, not so much for the big corporations that can send out these bonds to raise money.
Well, and the small businesses are getting a break because the One Big Beautiful bill has the automatic instant depreciation of capital investments. It restores that. That had been coming down over the years under Biden, and it was going to go away altogether, allowing them to take a write-off right away on their taxes from all of this, from these capital investments, will really help make the kind of investments that small businesses need to make more affordable, even if interest rates are still pretty high.
Now, let's talk about how all of this connects with the whole affordability issue that we've heard so much about. The media is spinning the tale that the affordability problem was caused not by Joe Biden's huge increase in trillions and trillions of new spending, but by Donald Trump, because he's president and he owns it because he's president. So you look, I mean, it's just ridiculous when you think about it, but you look at a graph, and we can put this up. This is from Unleash Prosperity. We've seen this before. There you see the first term of Trump on the left of your screen, and inflation really came down, of course, at the end because of pandemic, but it was pretty flat during the pre-pandemic time as well. Then it shot up during Biden, and the inflation rate came down, and now it's been pretty steady under Donald Trump again, and hopefully it'll continue to go down. The problem with the chart is that many people look at it coming down during Biden and say, well, he brought it up, but he brought it down again. He didn't bring prices down.
No.
The inflation rate came down because interest rates were jacked up by the Fed because of what he was doing with his spending.
That's right. Biden's reckless spending is really what drove inflation through the roof. He passed things like the American Rescue Plan after the economy was already reopening. It was really irresponsible, pouring trillions of dollars of stimulus into the economy, drove inflation all the way up. That was a terrible mistake. The Fed made the mistake of accommodating that for the first couple of years. They should have met that right away with a big rate increase and said, this is going to be inflationary. They could have prevented that 40-year inflation. They came late to the game. Inflation did come down. The problem with the spin that the affordability problem is Trump's, is that the media wants to blame it on tariffs. But if you look at this inflation report we were just talking about, the durable goods numbers, the prices have been coming down for 3 months. Year over year, durable goods, that's where the tariff inflation would hit if it was going to hit. Durable goods are up 0.9%. That's almost not at all. That's below the Fed's 2% target. It is not. Tariffs aren't driving inflation. That's a myth. What's driving inflation really is exactly what you said. It's a hangover from the Biden inflation years.
Well, we had earlier in the week the import-export numbers, and they were dead flat. We were expecting a rise there. It was not there. It was dead flat. So if anything, there is that. But again, the main thing is no matter how you kind of chart it out, affordability the affordability problem was caused during the Biden administration. I mean, price of housing going from $1,200 a month for expenses to $2,700 a month in just 6 years. I mean, that is on Biden. But the message, how do you get the message across? How does the Trump administration get it across?
And at a certain point, look, the American people don't want to hear whose fault it is. They really want to hear,
Right.
what are you going to do to address it? They can do things to improve it. And home affordability pretty much is the core of what people are objecting to. When I ask people when they complain about affordability, what they really mean is that it's very difficult to buy a home if you don't own one now. Because interest rates are so high, it's difficult to sell your home, because if you're in a 3% or 4% mortgage,
wanna move.
and even if you want to downsize, you're downsizing into a 7% mortgage. That's really difficult.
Right.
So that's what people mean when they say affordability. So the Fed lowering interest rates could help with that. The Trump administration is they're working really hard, but it is a hard problem to tackle and not something you can tackle very quickly. Try to figure out, how can we increase the supply of housing? You can do that. You have to convince localities, states, towns to maybe allow some more building, to allow more mixed-use
Right,
building.
right.
Places like New York City could build a lot more housing than we have, but totally blocked.
Yeah.
And then we elect a socialist who's not going to fix that
he
at all.
he wants private housing to fail because he doesn't believe in it. He
And he
wants
hates
to
the developers.
decommodify housing and put it all in the hands of the government. We would all be renters from the government. By the way, you just did a great deep tease for Benny Johnson, who's coming up, whose specialty is housing with the affordability project. So
I would like to
talking to him about
re-commoditize housing. That's what we
Exactly.
need. We
Of
need
course
more
we do.
housing for sale.
more
available to
housing
people.
means lower prices, and when we get the interest rates down, it will become affordable. Great to see you. Have a good weekend, John.